Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of May 29th through June 2nd, where we'll talk about how can we make money trading in June. So again, thank you for joining us for part one of our weekly trading game plan. We'll talk about how we can make money trading in June. We'll talk about our market analysis, some strategies, some trade ideas on how to make money trading in June. So let's get started. So here's our Google document with our notes for part one on make money trading in June for the trading week of May 29th through June 2nd. These Google documents with our weekly trading game plan notes are publicly accessible. You can find a direct link to this Google document in the description box below. We include all of these weekly trading game plan Google documents in a publicly accessible Google Drive folder, and you can find a link to that Google Drive folder also in the description box below, so you can refer back to these notes as well as notes from our previous weekly trading game plans. So we'll see how the markets ended up the end of this week. Welcome, MD. Thank you for joining us. Glad to see you in the live chat today. Easy Mike, glad to see you. Thank you for joining us. So we can see the markets had a pretty nice exuberant run. We'll see it ended the week with a pretty exuberant run. We'll talk about some of the reasons behind that, but we can see all the indices ended up over 1% higher. The NASDAQ was over 2% higher. We see we had, 2 to 1 advancing to declining, 70% advancing, 30 declining. Is that almost 20% or almost 50% new highs. Got 40% above their 50-day, 60 still below, so we've still got some weakness under the covers, only 40% above their 200-day and still 60% below. Welcome, Walter Lyons. Glad to see you as well. Thank you for joining us. So we see again mostly, and we'll talk about, the reasons behind the exuberant run, but we see the FANGs, the techs, the semiconductors all were bright green, had major runs this week, particularly towards the end of the week after NVIDIA had its earnings and announced this very positive guidance towards AI. And again, we'll talk about that whole exuberant run in our strategy section as well. We'll also talk about, the debt ceiling still looming. Do we have a debt ceiling deal? Is it a no deal? We can see the negotiations are still ongoing. We don't have a deal yet. They, talk about being positive, but again, we still don't know if we're going to have a deal or no deal. And then here's the big theme for the week, which is AI is becoming the stock market answer to everything. So again, that's pretty much the reason for this exuberant run is the euphoria into AI. And again, we'll talk about, some strategies how to make money trading that going forward, and also how not to get hurt in that possibly overly exuberant euphoric run. Oil's been pretty range bound. We'll see that in the futures as we've been talking about for a while. It's been pretty range bound between 70, 75. Natural gas also very range bound between 2 and 3. Gold and silver we'll see had a pretty major decline. Gold broke down below 2,000. We'll see in the futures as well. Now I expect that 2,000 level to provide some level of resistance, but we did see it did perk up a little bit on Friday, and we could see positives on all the futures and the indices. The dollar we'll see is strengthened up over 104. The DXY was up over 104. Obviously, that puts pressure on dollar-denominated commodities to some extent, although as we saw, oil wasn't really following that pressure from the dollar. So obviously all the foreign currencies were down. The treasuries had been pushing up to 4%. They just dropped a little below 4%. We can still see we've now again got an inverted yield curve. And we talked about the possible impact of the debt ceiling breach and or a deal on the various treasury bonds. So we'll look at each of the indices briefly. See the SPY now is broken out of that, pretty much a horizontal range channel. So it had a little bit of an exuberant breakout. Is that breakout going to hold, or is it going to, drop back below into that channel? We'll have to see. It's very close or breached this recent high, and now it's got, a higher high in the, high 420s. We look at the weekly. And we could see, had a nice run, running above its moving average, nice upward trend. And we'll see, is it able to test that resistance, that previous high? Again, positive trend, but it's still, again, still pretty lateral movement. NASDAQ obviously benefited the most from this exuberant run in technology, particularly AI. So see pretty exuberant run, broke out from the previous high. The next high is in the 371 or so. So we'll see if it continues on that exuberant run up to test that new high, or if it retraces. Again, that's a pretty extended exuberant run. So we'll see if we get some retracement and then a continued upward movement. Look at the Dow. Morning, the Ricky Khan. Thank you for joining us. Glad to see you. Flip of the Shippa. Thank you for joining us as well. See, the Dow isn't really benefiting from this. And again, we'll talk about sector rotations. We'll talk about money flow, etc. So again, I've been talking for a while. I don't think there's a lot of new money flowing in, and therefore there's sector rotation. They're going to take money from somewhere to, buy into this AI technology trend. And it looks like, they're taking money out of the industrials, out of the Dow. Also, there's some issues, with decreased government spending, may impact that infrastructure bill, etc. So some of those industrials may not benefit as much as people had expected. You see it tested that moving average and then got support there, pretty good support. So again, I'd expect, it'd probably retest that support level and probably hold, but otherwise, really not going anywhere right now. Russell, the IWM, again, very flat, have a, broad doji candle, didn't really participate real heavily in this run, still got heavy resistance from the longer term moving average. So again, pretty much lateral movement. I don't expect a whole lot in the Russell at this time either. Look at the VIX. Again, the VIX is really not, we're not getting a lot of fear coming out of that debt ceiling issues. If I go to the daily, we had a little bit of a pop in the futures up over 20, and then it very quickly dropped back down below 20. So again, we get a little bit when the debt ceiling breach looks, the probability of a breach increases, get a little bit of volatility, but it's just not holding. There's not a lot of fear. Pretty much they're ignoring everything in this AI exuberant run. Again, in my humble opinion, I'll throw my banner up here. None of this is financial advice. All of our content is our opinion only, and for education and entertainment purposes only. Again, we're not financial advisors. None of this should be considered financial advice. Welcome, Ellen Krantz. Thank you for joining us. Okay, so I got all the indices. We got the VIX. We'll look at the sectors, the groups from Friday. So again, exuberant run in technology, consumer cyclical. A lot of that's Amazon, communication services. That's, some of the other fangs are in there. Real estate did make a little bit of a recovery, as did basic materials on Friday. But again, the theme of the week is technology, communication services. We can see basic materials really taking a hit, both from the sector rotation as well as the strengthening of the dollar, etc. Healthcare also took a hit, and defensives again, very risk-on move, all fueled by this AI trend. Flippa says this AI is with Nvidia's pretty insane. I would comment that it's overly exuberant, but and euphoric, and again, ways to make money in that we'll talk about in our strategy section, and also not to get hurt. So again, the theme for the month, even for the whole quarter, it's been technology, communication services, even for half of the year. So we'll see as we're coming up on second half of the year, are we going to get a rotation? We're going to go into third quarter. We're going to go into the second half. Are we going to see a rotation from the worst performing, profit taking out of technology and back into energy and some of the other sectors, again, as a way to outperform in the third quarter and the second half of the year? So we'll have to see as we get closer to the end of June. So again, top performer semiconductors, all fueled by Nvidia, followed by AMD, and then I think even Micron had a run. Although I think Intel went down, as it's not really a AI based semiconductor. But again, pretty much Soxel had a very euphoric run, broke through resistance, and we'll see that as well. And then internet retail is probably Amazon. Again, some recovery in some of the basic materials that have been beaten down pretty severely, copper, steel, etc. So we'll see if that rotation continues. Some real estate, again, some recovery on Friday. And then the worst performers, again, some basic materials, coal, silver, it's been beaten down pretty severely. Did have a little bit of a recovery. Coal, uranium, again, we've been talking about that sector rotation in and out of uranium and how to play that. And it's been, just rotating in and out. So we've been, making some money just in that sector rotation. And we expect that to continue. Again, my theory, my hypothesis is we're not seeing a whole lot of new money. So again, they're just rotating the money from taking profits in the outperformers, pouring them into an underperformer, and rinse and repeat. So again, that's how we'll be making money, particularly talking about making money trading in June. Sector rotation continues, in my humble opinion, to be the name of the game. So we'll see what you all think, but again, that's my hypothesis, my philosophy. So for the week, again, see a lot of the basic materials were pretty beaten down. Gold, silver, beaten down pretty severely. Agricultural inputs, we'll look at the futures and some opportunities there. Again, semiconductors been the top performer. I did hear, some people are starting to take profits. Nvidia had such a wild run. I've heard, people are starting to take profits, and we'll look at, how that may present some potential opportunities. So pretty much same theme for the month. So again, we can watch this sector rotation and see where it presents opportunities. Again, silver, gold have been pretty beaten down. A lot of profit taking out of those, probably pouring into technology. Technology is very risk on. This debt ceiling thing, if we get closer to the breach, we might see a severe risk off move. We've talked about that, and therefore we might see money flow back into your risk off moves, consumer defensives, gold, silver, the dollar, etc. Let me grab a quick drink, and we'll bring up the investing calendar. We'll look at look and talk about the economic data from last week and see what we're looking at for this holiday shortened week coming up. Okay, investing.com is taking a minute to come up. We'll see. Hopefully they're not down. Just a quick reminder, markets are closed on Monday for the Memorial Day holiday. We hope you all enjoy your long Memorial Day holiday weekend. Also a reminder, the next FOMC meeting is June 13th and 14th. So, we've heard a lot of Fed presidents talking, some more hawkish than others. Some think, we need to, they're down for maintenance. Okay. So I guess we're not going to look at the economic calendar for this week. We can look at some of the news. I'll try to refresh it and see if, okay, so I got it back. So again, we see a lot of FOMC speakers. Again, some more hawkish than others. Got some building permit data, a little weaker than expected, but the new homes is not doing too bad. Manufacturing PMI is still showing a recession. So a recession decrease. New home sales getting pretty good. Mortgage rates dropped a little bit. Mortgage applications dropped. Mortgage rates went up a little bit. Had a big draw in crude oil inventories, but it didn't, really prop the price up significantly. Continuing job claims went down a little bit. Core PCE was hot, but again, the market really didn't. Normally, the market would react negatively to that because that's a major inflation factor that the Fed looks at. But again, there's just technology exuberance going on, and there really wasn't a significantly negative reaction to that inflation data. GDP was revised slightly upward. So again, as of Q1, we're not showing a recession. So it's not clear whether we're going to get a recession. Although in the Fed minutes, they did note that they're expecting a mild recession at the end of the year. Initial jobless claims, again, was less than expected. So this shows the job market continues to be resilient. So all these indicate, the Fed may be more likely to hike again. So the probability of a 25 basis point hike in June went up. So I think it might be around 50% right now. So we'll see, we could get continuing 25 basis point hikes in June and possibly even in July. But again, the market's not reacting negatively to that. Consumer spending is still strong. So again, the consumer is still out there spending, even though they're racking up record credit card debt. They don't care. They're still spending. So again, the economy is showing resilient. The job market showing resilient, but it's still contributing to inflation. So we see month-on-month inflation was a little bit higher than expected. So again, that's negative. I thought this was kind of interesting too, that personal income was flat at 0.4%, but personal spending was double expectations. So again, my point that consumers not making any more money, but they're continuing to spend and racking up debt. Another positive was that the 5-year Michigan sentiment inflation was relatively low, a little lower than expected. So again, that was a positive that the consumer is not expecting inflation to continue to go up. Sentiment was a little better than expected. Again, expectations were less than expected, 4.2 versus 4.5. Again, oil rig counts continue to decrease, so supply is decreasing. but we're not seeing a big jump in oil prices right now. So again, most people are not paying a whole lot of attention to this data. As we talked last week, the market wanted to run, and it's going to continue to run, in my humble opinion. Yes, Germany just announced, Alan Krantz pointed out that Germany just announced that they have entered a recession. And yes, that's true. So something to think about in your strategy is global companies selling products to Germany, and we'll also probably see other European countries, the UK, etc. Their inflation's also been high. If I have time, I'll talk about some people I've talked to that have traveled to Europe recently and their perceptions of that. Let's quickly look at again. Markets are closed on Monday for Memorial Day. Tuesday we've got some housing data. Again, home prices continue to be high for cash buyers, but nobody existing home sales are going to be weak because nobody in a home is going to sell their home and take a mortgage at a 7% rate, and those rates are likely to continue to go up. The debt ceiling puts higher risk on those, so we'll see job openings. Here, there's forecasting job openings to increase. So we'll see that that's unusual. So we'll see if it comes in below expectations. The Fed wants to see the openings decrease and more less competition for jobs, so that the wage price spiral doesn't impact. We still got some Fed officials talking, so that may have some impact. Then we get non-farm payroll, ADP, non-farm, and job cuts on Thursday, and then jobless data again. So that'll tell us how the job market's doing. And we'll see if the market's paying any attention to any of this. ISM, manufacturing, recessionary data, etc. More Fed speakers. And then we get payroll data. So we get jobs, payroll data, non-farm payrolls on Friday. Normally, that would be significantly market moving. But again, unemployment's expected to tick up slightly. So we'll see how that comes in and if that has any significant impact on the market. So we still have some earnings. It should be winding down. And again, you can see the earnings calendar on this tab in investing.com. It looks like they're having some issues today, but I'll also show you in Webull how you can see the near-term earnings calendars. But again, we should be winding down this part of the earnings season, and then we'll head back into another one. Also, just a reminder, you can get the earnings reports in near real time in our Discord. We have an earnings report channel in our Discord. Our Discord is free to join. I'll throw the link up in the banner in a second. But you can get very real-time reports on all the earnings reports by joining our Discord and seeing the earnings report channel in our Discord. And again, you can find an invite to our free Discord in the description box below, and I also just threw that up in the banner. So a great way to keep up with all the earnings. So here's the earnings report for this week. Got some airlines, got Zoom video. That was the past week. Let's look at next week. Got Dell, and Dell's going to be talking AI again. This whole theme, the euphoric, the hype in AI. So, expect any company that possibly can throw AI into their earnings conference call. That's going to possibly cause a pop in their stock, just if they can somehow relate what they're doing or what they're going to do with AI, right? So expect a lot, get a lot of mention of AI stuff, and then a potential pop is how they can relate whatever they're doing to AI. Again, some energy stocks, etc. Not a lot of big names. I don't see a lot of big names. So again, you can peruse through this whole list. Okay, I'll leave him up for now. So now we'll see how the markets performed. Go to the market screen in Webull. Checking the chat real quick. Glad to see you all having a good chat. Thank you all for joining us and participating. I appreciate it. Morning, Nagam. Thank you for joining us. Glad to see you as well. So I'm on the market screen and the online browser version of Webull. Just a real quick reminder, in addition to Webull offering their 12 free stocks for $3,000 to $3,000 for new users that fund your account, they're also offering 5.8% APY for their cash management for your idle cash for new users. So you can see you get 4.1 is their basic rate, plus they're offering a 30-day 1.7 extra bonus for new users. So again, you can make up to 5.8% on your idle cash using Webull. So again, you see we use Webull for our market analysis, well, most of our due diligence, much of our and the vast majority of our trading. And you can find our affiliate link, and we'd appreciate it if you use our affiliate link if you're not already using Webull, and in the description box below. So again, we see in the histogram we had more advancers, about 2-to-1 advancers to decliners, but in general the advancers were very small. We just had a very few. This is probably Nvidia and AMD and some of the semiconductors and some of the FANGs that were the big advancers. Small decliners. I thought this was interesting, though, is even though the NASDAQ, and we saw this past couple weeks, and this tells us also, again, there's not new money coming in. It's a rotation between the indices, between the sectors, etc. There was a net outflow of money out of the NASDAQ, and that outflow continued through the day. Not surprising that it increased. There's probably a lot of profit taking, people selling off, going into the holiday weekend. But again, I thought that was interesting. Even though the NASDAQ's running up, there's a net outflow of cash out of the NASDAQ. And obviously the NYSE was even more severe since the Dow, etc. So, they're not just taking money out of the Dow and putting it in the NASDAQ, or taking it out of SPY and putting it in the NASDAQ. They're taking money out of the market. Some of it's probably going to money market. I saw an article of net inflow continuing into money markets. Probably the bond yields are continuing to go up. So again, we're seeing money flowing out of the markets, yet the indices are going up because they're being propped up by just a very small number of the mega cap tech names. So again, if they start profit taking out of those, watch out. There could be a significant decline, right? Okay, so also you can see the earnings calendar, the near-term earnings calendar here in the calendar tab. In Webull, you can also see dividends and splits. So again, you can get a near-term view on who's coming up. There's Box, HP, Hewlett Packard. Both of those are coming up on Tuesday. So those might have some impact. It'll be interesting to hear how HP can weave AI into their narrative. Okay, and we'll look at the best performing industries for the week. Let me grab a quick drink. Okay, so as we expect, semiconductors very positive. Oh, it's interesting, Marvell. So Marvell had a big run. It's interesting, Nvidia kind of dropped off of that list. So hardware, software, again, AI theme. It's interesting. Some water utilities were positive. Education. So we see that rotation out of uranium. So again, I think that's an opportunity. There's R2 that we like to play. And so I think there's opportunity there. UROY and DNN. I know some of you are playing UEC. You can hear my previous comments on UEC in that due diligence video. Real estate's pretty mixed. Renewable energy, solar, continues to rotate, but it's not as strong as it was. IT services was relatively weak. So software, IT services, there's some quantum computing. I've heard people trying to mix quantum computing with AI. One of these days, maybe I'll talk in more detail. I've got some indirect experience with quantum computing. Um, just I'll give you my 5-second mixes. I agree. I think that's a great opportunity, but I think it's quite a ways out there, and you can see that in the Gartner reports, the hype cycle reports as well. And I'm going to mention that later as well. Banking, again, we talked about financials. Look at the ETFs. So not surprising, TQs, so NASDAQ up, NASDAQ up. Or even got the S&P up. Again, some of the same tech stocks are in the NASDAQ and the S&P index, and so those are propping both of those indexes up. They've even got the Dow up. So again, pretty euphoric, pretty greed-oriented mindset right now. So down on the VIX, up on the Russell. So again, pretty small cap. So pretty euphoric perception right now. Again, this debt ceiling, fears of the debt ceiling breach may reverse that. We might see a pretty severe reversal if that fear happens to take hold. So again, semiconductors going to be very positive. Here they're showing industrials positive, clean transport, self-driving. Okay, so tech-oriented. Healthcare pretty mixed. Communication services, again, next gen. Virtual work, that's interesting. Again, semiconductors, look at that. Technologies, all semiconductors. Basic materials, copper, nickel. Consumer cyclicals, online retail. So again, your internet-based consumer, so probably Amazon, etc. The consumer defensives are negative, so that's the rotation, right? Out of defensives, out of risk off, into risk on. Real estate's positive. And financial services was positive. That's all on Friday. So cotton, corn, silver. Again, silver is starting to make a little bit of a recovery on Friday. Silver, sugar. Alternative income, 7 to 10s, extended. Asia. And the currencies had a little bit of a rebound. The dollar did weaken a little bit on Friday, but it was, again, it's running DXY. We'll look in the futures in a second. Looks like it was running 104 last I saw. Welcome, Douglas PC. Glad to see you again. Hope you've been doing well. So Walter's making a comment that NQ is losing leadership until Nvidia. Yeah, that's triggered the AI hype, right? So we see the futures again. Friday generally exuberant. We see here, S&P's got some level of resistance there. We'll see if it breaks that resistance or if we get a retrace. Again, with such an exuberant run on Friday, I would expect some level of retracement. Nasdaq, you see, it's just broken out, and it's again euphoric move. We'll see if we get a retracement or if it just the euphoria continues. It could do either one. A retracement would probably be healthier, but again, euphoric moves are hard to predict or resist. So again, I'll throw up my financial advice banner again. This is interesting too. The Nikkei, we'll talk a little bit about this. You can see it's had a major run. It broke its previous high. It's running at, a very high level. Let me bring that up in another window because I want to look at that in more detail further on. See, the Russell is, it's not really participating in that exuberant run. See, Europe recovered a bit, DAX recovered a bit. Again, oil's been pretty flat, range bound between the 70, 75. So 75 resistance, 70 support. We'll see if it goes anywhere. Same thing with natural gas, been pretty much, between 2 and 3. You can see it has been making higher lows, but again, it quickly reverts back down. So again, pretty range bound. I'm not really playing, anything in those regards for a swing trade. Again, if you want to day trade these, movements in this range, you could do so, but again, for a swing, they're going to be pretty range bound until they make a move through either that resistance or down through the support levels. Again, silver, gold pretty much declined. Gold even declined, but below 1950. Although some support there, so we'll see if it did get some support at 2000. Broke down to 1950. Broke down, so we'll see if it starts to turn back around. Again, silver, same way, it broke even down below 24, down to 23, and then bounced. So we'll see if those swing back up. Again, with the debt ceiling issues, if we get a risk-off move, those might be nice opportunities. Everyone's, predicting that gold to go higher. Talking about central banks buying gold, so the price depression is probably a combination of the strong dollar and the rotation into things like technology. So copper did have a rebound. All the other agricultural corn had a significant rebound. Wheat's been pretty flat, and we'll talk tomorrow. We were looking at this opportunity. Looks like it's got pretty good support there, and we'll see if it makes that rebound following corn and some of the other agriculturals. Lumber's kind of declining. We'll see if it bottoms out. And we see, the bonds, really ran off with strengthening dollar. Increasing yields. So again, we saw the yields briefly breach 4% and then retrace a little bit. Again, dollar strength sitting up there at 104. So we'll see if this trend continues. Again, if we get a debt ceiling issue, that might cause another surge in the dollar. Also, if we get that flood of bonds, if we get a debt ceiling deal, we're going to have a flood of bonds. That's going to drive yields up, prices down. So again, we could have a pretty significant reaction whether we get a deal, debt ceiling deal, or we get no deal. Douglas asks if I'm shorting orange juice. No, I wish I could. As we mentioned, I think it was last year, I looked for ETF to be able to short orange juice because it made a run like that last year, and I couldn't find one. But yeah, we saw that exuberant run. I guess they're still having um, greening and some other drought, and we had some ice, and they're just having a hard time. So the prices are really ran up in orange juice, but I don't have a good way to short that. I would if I could. And Flippa says wheat has a positive divergence. Again, tomorrow we're going to talk about how we're looking at playing wheat. Yeah, no, I don't. I don't do direct futures trading yet. Uh, I thought about it, but we'll see. I talked about that last probably I don't know 6 months ago or so. E-Trade was offering that futures trading in a retirement account, and I had some issues with applying for it. We'll see if I want to apply for it again. I got plenty enough to do just trading what I am trading. So we'll see. Okay, so we'll look at ETFs. How am I doing for time? So definitely don't want to go over an hour. So we'll quickly look at our ETF spreadsheet. We just mentioned, I don't have one for orange juice. We looked at wheat. We'll look at some others. I'll bring up our ETF spreadsheet and then talk about that. Let me grab a drink a sec. Talk about the enhancements to our ETFs and some additions to our ETFs. Okay, I just wanted to reminder that our All Access and BIP Patreons have access to this ETF spreadsheet, so you can look up as we just looked at the futures, and then if you want to find an ETF to be able to, long or short a various index, commodity, etc. We put those in our ETF spreadsheet, those that we can find, and also the risk reward profiles, and highlight the ones that we think are the most attractive from a risk reward standpoint. So again, if you'd like 24/7 access to our ETF spreadsheet as well as our dividend payers and our puts, ROIC, return on invested capital, Google Sheets, you can join our Patreon at the All Access or VIP level. And I put there's a link in the description box below, and I also threw a link up to our BeachBum Trading Patreon in the banner as well. And you help support our efforts in bringing all this free content. So we greatly appreciate that. So you'll see I added a column in column V of the research tab. We have one that points or directs to the ETF database, and I added one also to the profile in FinBiz so that I can quickly jump over and see the FinBiz profile and the ETF database profile for any of the ETFs that I'm researching. Last week, Ricky Kahn mentioned URNJ in the live chat. Thank you, Ricky Kahn, for mentioning this. So we did the research. This is a uranium junior uranium miners. So I thought that was nice. Another way to play uranium through the miners directly. So we've added that to our ETF list under the uranium category. So again, thank you for sharing that with us, Ricky Kahn. So first, if I just show you our research tab. So here's you or I always put the research for our various new potentially new ETFs, and then I can determine the support, resistance, etc., top, bottom, and see the risk reward profile, see if we want to add them to our main sheet. So now, in addition to the link to the ETF database, you can also use the link directly to their FinBiz profile as well. We talked last week about these Tesla Baron Bulls, so I've added those to our main ETF spreadsheet, so you can also see those. We've been talking about wheat and uranium and things like that. So if I whip down there, so we'll talk more detail about the wheat ETF. But again, we have a ETF to play wheat, and we're watching that for an entry to potentially play wheat. We talked about uranium. So we can see the new URNJ. You can see it's not in our database, but you can see the risk reward profile of that. See, we added these Tesla individual stock or individual stock ETFs for Tesla. We also have the set we added last week. I think it was Easy Mike recommended for NVIDIA. So we have the long and the short on NVIDIA. So again, be careful, with NVIDIA. Shorting NVIDIA, it's a euphoric, not necessarily a rational run, although we'll see, at some point there might be some profit taking. So other than that, I've heard other people ask about some of the AI ETFs again, and we did a separate video that you can see on our channel where we talked in more detail about these AI-related ETFs, so you can see those in our ETF spreadsheet as well. So again, you can peruse this in more detail, look for opportunities. You can see the ones in green meet our criteria for risk reward profile, and then you can see if there's a thesis behind those opportunities that you want to pursue. So again, gold, silver we talked about. You can see various gold, silvers. We talked about some of the agricultural commodities, etc. And we'll talk in detail about more of these that we're watching specifically tomorrow. Just want to get on to our strategies for the week before I run out of time. News, again, you can see news automatically posted in our Surf the Markets channel in our free Discord. So again, also the economic data. So it comes out, as economic data is reported, it comes out pretty quickly, near real time in our Surf the Markets channel. So I most likely won't bother with copy pasting data from investing.com very much, since that news reporter seems to report the data very, very quickly. So let's very quickly talk about some of our strategies for making money trading in June. I produced a couple shorts talking about the best performing stock market sectors and how the stock markets perform in June. And you can view those shorts via the bonus links in our notes here, and we'll be releasing those as soon as possible. Quickly look at how June performs, typically, historically. So, and you can again find this link in our notes here. Is typically how various months perform from a historical standpoint. And here we can see June has a tendency to be slightly negative, so negative 0.06%. We see May is slightly positive. Part of this may be, the thesis that people use about, sell in May and go away. But again, June tends to be slightly negative, so a slightly bearish tendency might be a good way to make money trading in June. So we'll see if this June happens to to perform along those historical tendencies, or if this AI exuberance gives us a more positive June. But again, we see, pretty significant drop off. April's very positive, May less so, June negative, and then we get a bounce back going into July. So again, June may be a good buying opportunity. If we get some slight retracement in all the indices, look for opportunities for good deals, because you might get a better price in June and then a bounce back up in July, and then we see August, September go negative again before we get the run up in the fourth quarter. So again, you can, this might be the opportunity to pick up some stocks that you wanted to buy going into July and later this year. So I hope that all helps. So again, very quickly, we talked about the debt ceiling. So I've released our previous discussions about how to make money trading while the debt ceiling's looming, whether we get a deal or no deal. So you can see those videos. Talked about sector rotation in general. I'll quickly look at the technology components. Again, you can find this link in the screeners tab, also in our ETF spreadsheet. So again, our Patreons have access to this. You can bring this up at any time. We see the big run up in the FANG U, big, huge, exuberant run up in SOX L. Tomorrow we'll talk about potential opportunities. Is if can we play SOX S to short that? We see, it's very extended. TQQQ broke out, but it's got some room to run, and LabU rolled over. So just like we're seeing rotations between sectors, between the indices, I suspect there's sector rotation within the technology components into the FANGs, the Microsofts, the Googles, etc., the AI-related FANGs. Obviously, the semiconductors with NVIDIA, which obviously pushes TQQ up, but I think people are taking money. They took money out of biotechs, partly to put them into the AI-related. Again, my hypothesis. So I also just wanted we've been talking about this AI hype, and just, I can talk about it in more detail, but I've talked about the hype cycle, where you can see these videos of that I did quite a long time ago on how to make money trading the hype cycle. Is AI at peak hype? I would hypothesize if it's not close to peak or if not at peak hype, we're probably pretty close. So again, you can see, how I recommend you trade the hype cycle, how you can make money in any phase of the hype cycle, and how we typically trade things based on the hype cycle, also the technology adoption life cycle. And my opinion, the ChatGPT, the adoption of ChatGPT by more of the populace has allowed AI, at least that technology, that level of technology, to cross the chasm. And you can hear my discussion there about what that means, and reaching general adoption, and what that means for the technology going forward. So tomorrow, again, we'll talk about our individual stocks that we want to pick to put on our watch list for next week. And we'll also talk about opportunities with dividend payers, and potentially, selling and buying back puts with using our puts ROIC Google sheet. So again, we'll talk about all that in more detail tomorrow. If anybody has any particular stocks you want us to look at tomorrow, you can put those in our Discord, or contact us in any of our other social media sites. Again, you can find links to our Discord and all our other social media sites on our homepage, beachbumtrading.com, bum without the U, under the links section, as well as links to the tools we use, the platforms, etc. So again, if anybody has any last minute questions, otherwise, again, you can post those in the comments below, in our Discord, etc., and any of our other social media sites. I appreciate everyone that joined us today, and I hope that you like this. Please smash the like button. Please share this with your fellow traders. We would love to really build up our BeachBum trading community for everyone's benefit. The more traders that we have, and the more, if we can get the YouTube algorithm to share our content with more traders. But it's best if you all help us and share our content. Invite more of our traders to join us in the chats and the live streams, see our videos, join us in the Discord. We can continue these conversations, 24/7 in our Discord. So we hope that you will join us and help each other out. Our goal is to help everyone succeed in your trading and make money trading in June. So I hope to see you all tomorrow for part 2 of our weekly trading game plan for May 29th through 6/2, June 2nd. And again, we'll select our individual stocks for our watch list. And again, we'll talk about more trading strategies, trading ideas for this trading week. And again, we hope you all enjoy your long Memorial Day holiday weekend. And we hope to see you all tomorrow. Bye.